The Exchange on Deep Dive. We calculate. We elevate. We innovate. But above all, we dominate. Happy Talk 100.4 FM at 8. Harari's Heartbeat. Hashtag dominate. The Exchange on Deep Dive.
Time is 21 minutes past 7, and we welcome you to our main discussion this evening. We call this The Exchange, and this evening we want to talk a little bit about the context. Really is the Reserve Bank of Zimbabwe addressing public concerns regarding availability of ZiG notes, especially outside of Harare. So recent data shows a significant increase in local currency transactions, with settlements rising from 7.86 billion ZiG in April 2024 to 56 billion ZiG by the end of May 2024. So this indicates a growth acceptance of ZiG, with total deposits also looking in it's approximately 16 billion. Banks are holding over 207 million, which is deemed adequate for public transactions. So we want to get deeper into this as we talk about financial stability and what is being done to curb inflation as well as ensure availability of ZiG across Zimbabwe. Joining me in the conversation is Mr. Pascal Mandeya, an economist, and we are also looking forward to being joined by Persistence Gwanyanya in this conversation. But to start us off, Pascal is in the studio. Pascal, good evening, and thank you so much for joining us.
Good evening. Thank you for having me.
All right. And as I said, we will try and connect with Persistence so we can also hear from the RBZ Monetary Committee point of view. But perhaps let's start off with you and just paint a picture. Who is responsible for overseeing the distribution of ZiG cash or ZiG notes to ensure availability across Zimbabwe, and particularly some of those areas that are, underserved and out of the way?
That's a very important question, Rumbi. Put differently, I think the starting point is, how do you end up with ZiG? How do you get ZiG? Contrary to popular opinion, ZiG is not just the notes. There is an electronic version of the ZiG, which is what you get into the bank. It's digital money. And it's not unique to Zimbabwe. Most of the currencies in the world, they actually exist more in electronic form than physical form, including the US dollar. So you'll find that you will have trillions of US dollars in people's bank accounts, but only 10 or so % of it is actual physical cash. That's what technology has done. We've digitized banking, we've digitized currencies. So for you to actually get ZiG, how the RBZ issue ZiG, when the paper money, the ZiG notes, when they print them, they then exchange those printed ZiG notes for electronic balances with the commercial banks. So that's the starting point. And then the banks themselves would then issue the notes now to their ZiG account holders, who would then be withdrawing. So that would be the normal channels. So once that money is now in circulation, of course, traders and people paying off their debts will now exchange that. Why it's important to understand that is because when they say they are now bringing in new notes, we've got trauma from 2008 and before. We start saying, okay, now they are printing new money, therefore there will be inflation in them. So the distribution channel involves exchanging the ZiG for ZiG notes at 1-to-1. I don't know whether that's still making sense. So the short answer to your question is the RBZ would issue that money through the banking system to the banks, but they don't just give them. In exchange of that, the banks actually make withdrawals from their own accounts with the RBZ. So the total money supply, the total money available, is like, for most people, if you've got $1,000 in cash, you've got another 20,000 in ZiG at the bank, and say 2,000 ZiG notes as hard currency. When you go and withdraw from the bank, and now you have got less of ZiG in your account, but more of it as paper money, you can't say now I've got more money. But unfortunately, it's like when you've got $100 bill and then you exchange that for 520s. It's still $100, just in a different form. So the RBZ would then issue that money through the commercial banks, and then people would then withdraw it from their banks. Afterwards, now whoever is holding it, whether it's the combi driver, it's Ambuya Pamsika, can then exchange with everybody else.
Thanks so much for outlining that. It really is intriguing and interesting to look at it that way and understand exactly where the money comes from. But Pascal, the issue now is there are various people, those maybe who are using public transport, who are trying to procure certain things. They are citing a shortage or an availability challenge.
Well, when we look at the legal framework, I like having discussions with you because I can always bring it back to the law. In terms of the existing regulations and laws, whoever is trading must give people the opportunity to pay either in US dollars or in local currency. And the forms of payment at law, you must allow people to use digital money, which is either swiping your mobile money, or commonly called Eco Cash and whatever, or physical cash. So that requirement for physical cash on its own, it's sort of illegitimate or illegal. In terms of the law, even combi drivers, if you say Nrudaku swiper, they shouldn't say no. Actually, there are certain regulations that were put in place 2-3 months ago where they said if you're opening a new banking account,
you should
the
have
bank must
POS.
yes. So on its own, saying to the Reserve Bank or the government to say, no, I want cash because I don't want to take swipe, you're essentially saying I want to break the law. But when you then get to the practicality, of course, the combi drivers, I mean, it's not a lot of money. Most trips, Eben Harare, it's 50 cents. So they actually use the ZiG more as tokens, where the rate, I think, has been fixed at 1 US is to ZiG 40, so they give you your 20 change, and when you come back, you use it, and life goes on like that. So it's important for us to understand that while the reality is that you may prefer to get ZiG cash, hard cash, you're actually not allowed to refuse to accept. That's a mouthful.
It is, yeah.
If somebody has a swipe club or the mobile money, at law you must be able to accommodate them, no matter who you are.
Reality and, what the law sets out seem to be at odds here. And I'm talking about the lived realities of many people.
Happening around that. There's no reason why we can't have swipe cards and other things there. Other than the mere fact, well, we'll come to that, where transaction costs associated with one form of currency than the other. Because now you then have your 1% mobile money charges and whatever, and the tax. But otherwise, at law, there's no reason why anyone should, because turn down digital ZiG, the electronic form of it.
Okay, interesting indeed, and we certainly will touch on even those issues around the transactional costs. So, I mean, even before I ask the next question, how can we have a paradigm shift from citizens or people who are using money thinking that they need to hold money in order for it to have a value? You're talking about digital money being available. It's what we've been using this whole time. But the narrative and the mindset around it is through the ZiG Cash.
I think the real problem is, I can only speak for myself. Fortunately, you didn't do the media nowadays. They give you these exemptions. They say people who are coming, it's their own opinion. These are my own opinions and whatever. We didn't do a good job of getting people.
The disclaimer. I'll do the disclaimer.
Yes.
Absolutely, yes.
We didn't do a good job of explaining 2008 to the people. So anytime there's talk of printing money, people panic because they think now there's inflation. The real problem, I hope I will be able to explain it slowly, it's not the actual printing of the money that grows money supply. It's the borrowing of the printed money. Like, for instance, what was happening 2007 and whatever, the Reserve Bank, we can talk about this guy is no longer in office. The former governor, the second past, whatever. They would then print money, lend it to government, or borrow it themselves, and then they go and buy currency in the market. So this is what was driving the price of foreign currency in the market. If they had printed money and exchanged it for the electronic form of the Zim dollar then, which was the currency, there's no increase in money supply. So it's the distribution channel that they were using and the amounts that were so ridiculous, where they would then have to change the size of the notes, print bigger notes, they rush to the parallel market, lend it to government. This is where the problem is. If you print money and you exchange it with another form of money, I mean, 1,000 ZiG in my account, 1,000 ZiG, still 1,000 ZiG. The difference is not that big. So now people start thinking, okay, what the government is printing money, the Reserve Bank is printing, they think inflation. So yes, money will be printed, but will be exchanged for other money. The other thing that we have changed, like the nomenclature. When government is borrowing, we say they are printing money. Technically, they are not. It's not really printing money. It's not them. So printing money is, government borrowing is now used as a euphemism, or not euphemism, whatever. It's been taken to be the same thing. And besides, it's not just government which would borrow and increase the money supply, even private borrowing. If you and I go to the bank and I'm buying your house or car and you say, okay, I get a loan for $1 million US or $1 million ZiG. The moment they do a transfer from my account into your account, you cannot now buy with that money. So what the bank has done is, by lending me money, the contra to that, they are allowing me to then pass on money to somebody else. So Mariano Ngowapiwa Nemuna Kwereta Bank buys the same as the other. You can actually join the queue and start withdrawing. This is why you find that there are certain banks that got big in Zimbabwe in deposits, because what was happening is they would lend people on the understanding that you are paying somebody who then keeps the money in the bank. So the creation of money is done by commercial banks when they lend. That's why you find that now there's now this requirement to say, okay, you must give some of the deposits to the Reserve Bank. But that doesn't stop money creation. So commercial banks, by lending, they create money. The Reserve Bank, when it lends to government, when the government borrows through the banking system via the Reserve Bank, they have also created money, because they borrow and then they pay somebody else. Once that transfer is done into that person's account, they can now go and swipe and do all sorts of other things. So the fear that we have, that anytime the Reserve Bank talks about new notes and whatever, everybody says printing money, inflation. Because the trauma of 2008 and before was never explained that, no, it's not the actual notes. It's like if you've got $100 bill, if somebody gives you $101 notes, you still have $100.
Yeah.
Yes.
That's a good example. And I think this is where we're getting it wrong. That you didn't think that because I have more notes, I have more money and the value has changed.
Of course, there are certain things that you can do when you have got change. And in economics, in behavioral economics, once you change a bigger note, sometimes you are more inclined to spend the smaller notes. This is more to do with behavior than saying the actual money supply has grown. So them printing new notes, the distribution channel is simple. They'll just ask you to surrender the ZiG. Oh, by the way, another important factor, we can never run out of ZiG, for the simple reason that the digital version of it can be created by the bank instantly.
What do you mean when you say that?
If you walk to the bank with 10,000 US dollars, the bank, whatever bank it is, they can't turn you away. They will buy that 10,000 US of yours at a certain rate. And if you're a customer, all they need to do is they take that 10,000 US and they pass an entry into your account, a digital entry. So they've just created that ZiG by buying your US. if their accounts somehow then don't balance later on, because now once they create, sorry, I'm getting too deep, but it's important for people to understand that
No, please
it's
go
complex.
there. Go there.
So rumbi waya ne 10,000 US over ones 1 to 14 rate. So they will give you, that will be 400,000, I think, ZiG. My account going to transfer your app. But now, because you now have a deposit here 400,000 iwewe, Reserve Bank, that for every deposit, I mean, now give us some money. So your bank now has an obligation to transfer a portion of that. Now I think it's 30%.
Out of my 400,000.
Because they've got that 400,000, you own a deposit here. They must put in on the reserve ratio. Can I 30% takuti 120? You unfana some account mamo. But for them to get that money into their account, pampacho wakufana utotengesera ma USI ku Reserve Bank as well.
It's quite complex, yeah. You were not joking. It is very complex.
So that's the thing. And there is no one, I can guarantee you, who has ever been turned away by any institution and any my US account holder or Tindrukuda ZiG. Problem yatinoita, I'm now going back to Sean, I think I'm assuming in a most people.
And this also
problem inoita vanhu manje. Ananga asina chinhu anenge donokwereta ku bank, obvanza hakuna mari, hakuna mazigi. No, iwewe wakabate chii. Ukaenda uine ma US hakuna bank Reserve Bank chero kwani whatever my US awe, they will then get them off that bank kana bank raku, because paunoya nawo bank riya rinokuisira mazigi mu account mako. Iro bank riya yamanje, because one is deposit zombe kana rakuda kunocomply neku Reserve Bank rinongotora a portion yema USI ronopa chi Reserve Bank roisirwa chi mazigi aro muningi haapere, because this is a currency that we create kuno ku digitally.
Pascal, I'm wondering where the disconnect is. If it is ubiquitous, high ZiG supply, where is the shortage coming from?
The thing is, for you to get it chicha waita, because raitika kudhara manje, government spending, pane zvimwe zvinhu vaita varuda kubata ichi varuda kuita this that vasina kutekesa vanhu, so they would then borrow and then pay their suppliers in ZiG. So government manje yautaura no, we will not pay you SATA collector tax. They've restricted the supply yema contracts. So vanhu vanongoti hamuna ZiG market. What has actually stopped happening is your supplier wako, your customer yaikupa ma ZiG kana waita something is the one who has stopped my contracts iwayo. And also vamwe vaida kunoborrowa, because now banks don't lend willy-nilly, because if they pane ma restrictions also to lending and whatever, my interest rates akakwira. So vakati atina ZiG rekukulenda, technically they are not telling you the truth. The truth is they are looking at you kuti the cost yemari in terms of interest iwo unogonotadza kuibhadhara.
I see. So it then becomes expensive to lend.
And riskier.
To lend.
Yes.
Okay. We also want to talk about, you talked about the human aspect to all of these things, behavior, psychology. Let's talk about building confidence in the currency. Fiat in itself means faith, isn't it? And we're trying to restore that. So how can confidence be restored in the ZiG currency, or built up, if there was none to begin with the public and investors?
The real question is, is it even true that we need confidence? Sometimes people just throw around these words and whatever.
So do we not need confidence for this to work?
It's overrated. There are certain decisions at the margin, like investment decisions. Yeah, you can get that. But all these other things, the ZiG are number US dollar. Actually, now we've got a better currency now. Because, let me explain this. Because now I'm opening another can of worms.
I don't know if we have...
backed by gold.
Okay.
Backed as ZiG uchanopiwa gold somewhere. No.
Why does it not mean that? I think it was, shouldn't that be what it means?
No, that's not that.
Interpretation.
That's not that. All we are saying, Kuti, the owners of the currency, the RBZ, can then buy back the currency because they are keeping my reserves. Do you see what I'm saying? Could now what these guys can do, because if they're keeping gold and other currencies and whatever, they can go to the market and say, now we've got US dollars to offer in exchange for ZiG. Ndokunonzi ku defend a currency kwacho kuti kana yakuluza chi power. So let me give you an example in it. Zvakaitika pa issuing a currency yedu. Again, we are guilty as analysts and whatever, but maybe we didn't put it across. Like, you know what happens with Mashema company, Panitwa NIPO, you are a lawyer. You set a price, these shares are issued at this rate now. This is the initial offering. But afterwards, I would trade to stock exchange, different prices. You can't go back and say, because share rangu iraga issue at 27, therefore somebody must give me 27. So the calculation, the initial price, ZiG from Zim dollars was based nenya kune ma reserves akadai, the gold price iri papa chichi. Do you see what, you remember those numbers? Kunana 14 chichi. So it was the initial calculation. Beyond that, the Reserve Bank was very clear. It will be determined on a willing buyer, willing seller. Market. So
market forces then kick in.
But of course, nema rules you can only move by so much and this and that. Monetary policy. When they say interest rate are this high, bank deposits they must. That's how they then manage that. But my reserves are to keep higher, which by the way are far much more than at current exchange rate. The value of ZiG are in issue, digital, physically, and whatever. If it becomes necessary, could rate change, they can then take the foreign, because remember the exchange rate ZiG to US dollars. So they can bring more US dollars to the market. But Maziga, the only way they can be created is either through lending by my banks, or when somebody comes and sells my USU. So it's not like somebody who all of a sudden come with $1 trillion ZiG from nowhere. The system isn't. It's not going to happen. But again, because people didn't get it, and it was written in print, Economist wanted to understood. All of a sudden, claims were like, if it's backed by gold, I want to then go and get gold. But that's not the arrangement. Irungonzi will keep enough gold and foreign currency to make sure that if something happens to the currency, like for instance, if government then has an emergency and they say, okay, we have to do A, B, C, D, we are borrowing from the Reserve Bank and paying our contractors in ZiG. The central bank would then come in and say, supply my ZiG, I want through the borrowing. Therefore, we can now bring my US, or we sell gold, get US, and bring US dollars into the market to mop up the ZiG Nenge introduce you.
To mop up liquidity. That's interesting indeed. We're here with Pascal Mandeya, really getting deep into issues around the ZiG, understanding how it's generated, and really, as we are getting deeper into the conversation, I'm seeing that it's actually not correct to say that there is a shortage of ZiG, or this separation between notes and the digital form of the ZiG. It's all one and the same thing, according to our guest in the studio. Another key question, Pascal. Let's look at the relationship between ZiG and the United States dollar. Do you foresee an evolution between the two, particularly around exchange rates and the parallel market, the infamous parallel market?
The reason why we have a parallel market is because from earlier than 1965, I think 1 July 1965, Ndobagaisco Exchange Control Act, it predates UDI. Yeah, UDI was Gunana November, I think. Whoever was running the country realized that the foreign currency that we require as a country is less than what we are. So there were always restrictions. In the past, you couldn't travel and just go to the bank and collect money. Where to pay a holiday allowance, there are things that you couldn't import. There were always import controls and whatever. So it's not a new thing. So what then happened with ISAP and us trying other things and whatever, and us testing foreign wines, foreign beers, now our tastes have changed. We now want to import more than we can export. Per capita, when you look at countries that look more like us on SM history, like Anana Kenya, when you take the total value of exports in Nika, you divided the number of people. In Zimbabwe, we actually export per person more than all these other countries. The problem is my imports. We bring in lots of stuff that we don't really require. You look at fuel, for instance. Our total fuel bill. driving habits. Yes, public transport collapse, but really, do we need so many cars being driven? It's a person per car when you look at it. The other thing is, what are we spending our money on? My imports are trukupinza. It's not just trinkets and whatever. So that's where
it's a lot of luxury items.
We wouldn't call them luxury, but if we were going to be honest as a country, we would say, but we really don't deserve it. Like used cars, for instance. We keep bringing in these cars, but muno dzimwe dzakapakwa dzine dzakafa chinhu $100. Kudhara, the infamous Willowville scandal was because there were insufficient cars around to go around. Here we've got a lot of things that we bring in. I mean, you go even in my shops, the things that we use, we could. They must be, we should be able to restrict my imports. If you want to find out how the most successful economies, China, world powerhouse, it's so hard exporting into China, even re-exporting. You buy something to China, wrong spec, bring it back. No. Whereas Munom, we just allow stuff
we're
to
like
come.
a dumping ground almost. I've heard that being said.
Yes.
Of Zimbabwe.
So that's where the problem is. Why that is important, it's now because for you to make money more often than not, you have to bring in something from outside and sell to people and whatever. And now the banks would never have enough foreign currency to sell or to give to everyone who wants to import something. But now, because you can pass on the cost, what people will do is they know that if they go up a parallel market, whatever they buy those things for, they can still come and sell and make a profit. So it's like it's like a dog chasing its own tail. So the parallel market will not go away until our demand for foreign currency is less than our supply of foreign currency, which is basically our exports. The other problem is because we're frozen out of international capital markets, something that that the government is now trying to do with the arrears clearance and debt, whatever. We can't borrow elsewhere to then say, okay, please give us 10 billion so that whoever wants foreign currency with ZiG, they will be able to get. But you see, the other challenge with the parallel market is the banking system itself. We allowed, the we is the royal we, I'm not part of the system, but as a country, banks were allowed to lend the money that other people had deposited. And also banks themselves, they created deposits by lending people money. For example, if you sell your house to me, let's say for 500,000, you get a mortgage. I sell my house to you for 500,000. If the bank gives me a loan, that transfer we were talking about, what only 500,000 US money?
My account mango.
But apana ma US amboya ku bank. Wakuto join all queue, takuto mirror kuti mine ka exporter chi yeah.
Interesting.
So we've got over, I think, close to 3 billion deposits that people now have in their banking accounts.
That are yet to be honored.
Yes, so that money now, the real US that we use, and nostro. But you see, when you want to import something now, you can't transfer to that person's so-called nostro account because ana nostro kunoku. Your bank must then have US dollars in their account, which is the proper nostro. So the challenge now is because banks can't settle. And the other thing is, RBZ won't like this and government won't like this. We allow banks to default. Anywhere else in the world, you go to the bank, if they can't pay, that bank is closed. But here we've accepted that you can actually go to bank, win $1 million, monostro market, ndokumbira 200,000, wakuti hatina sorry, and no report. So the parallel market is also caused by that. Once the money gets into the banking system,
getting it out is bureaucratic. So people are finding alternative, albeit unlawful means to do so.
Yes. And also the other thing is my charges. That's a big one.
Whilst you're on that, let's talk about transactional charges. I shortly will be coming to our WhatsApp platform in just a moment, but there is something in particular that caught my attention. So I'll jump into this message. This is from Mujinam Shonga. Good evening. And he says, hi, Lumbi and Pascal. Transactional costs are too high. I swipe for a drink for $50. The bank charges me $1. 70 cents plus 2 plus what? Okay. 7 cents plus 2 cents. The same costs apply when I swipe for $20. The same applies to ZiG when the bank charges 30 ZiG per transaction from a transaction of as little as 15 ZiG. So let's talk about transactional, charges. You also mentioned that you find them to be rather high.
Yes, they discourage a lot of people from keeping their money, because ideally when you keep money in an account, especially if it's supposed to be a savings money, you expect to get more money than you put in there. But it disappears. Part of it is to do with the structure of bank earnings, because when they couldn't lend sometime in the past, they had to find a way to survive, to look after their infrastructure, their salaries and so forth. So the Reserve Bank sort of turned a blind eye and allowed them to then go and adjust these charges. Ordinarily, banks are supposed to be financial intermediaries where they lend money and they get deposits. In theory, there's a lie that has been told a long time that a bank needs a deposit for it to know. It's the other way around. But ordinarily, interest income is how the banks are supposed to make most of their money, not these charges. Now, some of these things look even ridiculous, where digitally you make an inquiry on your balance, you're being charged some amount.
Yes, I think it's 20 cents even for checking your balance.
And they've adjusted these things that I'm not picking any fights with anyone. They can show you the screen, but they've programmed it to blank out so that they charge you. I mean, already the information you have it. If you are showing me per screen, then...
So perhaps, how
so those
do we...
charges, and some of the charges, they are not entirely generated by the bank. Because for people, Panama transaction charge, the IMT, the intermediated money tax or whatever, where if you transfer from one account to the other, you
2%.
That discourages transacting zero official. Because in reality, when you look at it, if you're going to be charged 2% out of 100, I would turn $100, $98.
Oh, wow, so true. More questions coming in, Pascal. And this one's from Patrick, who says, Madam President, can you ask Pascal for me, are the monetary authorities aware that there's a serious shortage of ZiG currency? Secondly, after being told that ZiG is a stable currency since it's backed by gold, we saw the RBZ devaluing it barely 6 months ago after its introduction, yet there had been no changes on gold prices. Can he tell us why there was a change on the ZiG?
First and foremost, there's no shortage of ZiG per se. There's a shortage of the physical form of the ZiG. We have agreed on that. Most of it exists as digital money, so there's no shortage there. The actual printing of it is, there's a cost to printing money because you use security paper, and also the tax authority then forgo the revenue they are getting from IMT, because now you and I can exchange the same 20 ZiG note forever and they are not getting anything. Whereas if we are doing my transactions, I send it to you, you send it to me, not opera one day.
I hear you. We're learning.
So
Absolutely.
there's that as well. It's not in their interest as such.
There's no pound of flesh.
Yeah, but also the other thing is managing it. Because now there are certain things like anti-money laundering and whatever. Because right now, digitally, if you were not aware, the RBZ has got what's called red-on access to all the transactions that are, including mobile money transaction.
Mm-hmm.
So they can see who's sending what to who. So it's important for regulation now. Once it's now paper money, Munungu Exchange America, they can't,
Interesting indeed. I come back to the questions here. This one says, Pascal, thank you so much for the education. Bank charges are just something else. I remember having kabuke cabs, kaita interest long back. Nowadays, the banks are... Okay, I can't say what. Okay, it says the banks are troubling us. You hardly understand how they are charging us on transactions. You actually confirm that. Mzina Mshonga, good evening. You say, good day, Pascal. Please confirm there is a total amount of ZiG in all forms known. Let's say it's 10 trillion. Is it not possible for the government to just print cash notes adding to the total without exchanging it? That's the fear we have and reality.
It's possible, but that then creates a debt to the government. Once they are given mariacho, it's church credit vanenge vaborowa. But that's not going to happen. We have to trust them. Because right now, they are not borrowing it for anything else. And they are also taxing at the fact that we are complaining about taxes, it means they are now getting their money from somewhere. So that's the thing there. It's not the printing, it's the borrowing.
That's where the high cost comes from.
That's where the problem was. That the government would then borrow the printed money and then use that same money to compete with us on the parallel market.
I mean, this is a very, I don't think it's a pedestrian question, but why can they not borrow the digital money?
Well, there are certain laws that restrict the amount of money that the government can borrow based on the previous year's revenues. And really it's a choice because there's political pain. These things have got political consequences. Because once there is inflation and whatever, people are not happy. It's harder to govern the country. So what they have done now, first and foremost, in terms of the main infrastructure projects, they've moved. You know, the Mshonga spoke about the currency depreciation last year. It had to do with the government having settled people who had done infrastructure projects. They paid those people in ZiG. And that money found its way in there. What has happened now, the majority of, well, some of the projects got completed. So kana road yekumashringo yakagadzirwa, other than maintenance and bits and pieces there, they are not going to need that. But also the other roads that are being done now, like Vic Falls, Blawayo, anima structures, our built operate transfer structures, where these guys are saying, okay, fix the road, you make your money from the toll gates. You are not going to get it from us. Trabablas. These guys who built it, the money that paid, that didn't come from taxes or from government borrowing. Pani Maria takapiwa ne IMF ngwe COVID 900 something. Some of it was set aside and then used to pay off that. And also the containment on government salaries. Right now, they are not giving so many interest. Of course, those who work for government are saying, no, but we're not being paid enough and whatever. So there's that as well. The management of government expenditure takes away that requirement for borrowing by central government. And also the fact that they are now taxing and Zimra is chasing up, doing all sorts of things. So if they tax you, they've taken away that money from the market. So they're taking with one hand and giving it back. So the overall supply of money doesn't change.
I hear you. A couple more questions. We're fast running out of time, Pascal. The time always seems to just go by whenever we're getting deep into it. I think 2 or 3 questions look the same. This one says, if our economy is mostly cash, ZiG is digital, but today, but some people do not want ZiG because of the exchange rate difference between cash and electronic money. Another message here, where did it go? It says, kare times wauti munakaisa mari mubenki aibereka kana kuwanda. Komazuano zvichiri kuitika here kuti inowanda. I think you addressed that. There was, okay, this message says even some of government departments will not take ZiG. They talk about police when you're paying fines. They tell you kuti we don't have a POS machine. But there you have it. And just bringing it all together.
Rates, the rules were changed. Anyone can use whatever rate allows them to accept all my currencies. If you prefer the US dollar, please don't complain about the exchange rate, because the Reserve Bank changed the rules. They said you're allowed to use your own rate. Issue my bank charges and interest, a lot of it is historical, because my rates are with the Reserve Bank, and they're also forcing my banks to pay interest on those deposits now. So we expect that thing to go away. Issue equity digital neningi. The main one. Going forward, we must move away from the US dollar. It doesn't help us. But right now, we've got the assurances from the current president that can only happen after 2030, I think, thereabouts. So the fear that all of a sudden one day we'll move away from US dollars, it's going to be a gradual process. I think a lot of clarity will come in when we now have the new 5-year development plan and whatever. So it's not immediate. So for now, we are okay. So let's find out the truth and not panic. I mean, look, $100 ya upiwa atuma 50 what Maria wande.
I hear you, and it's a good place for us to end the conversation. Pascal, thank you so much for your time, your expertise. Manyasa utsanangura ndinofunga kuti zvanzwisisika. And yeah, let's put a pin in this one, but we definitely will have more conversations with you around economics and a better understanding of all things around us. Thank you so much, Pascal.
The pleasure was all mine. Thanks to our listeners, and good night. See you next time.
Wonderful stuff. That's Pascal Mandeya, our guest on The Exchange. Now, with that, it's just 1 minute past 8. It's time for the news.
The Exchange on Deep Dive.